Senate Democrats want to extend the tax cut on Social Security withholding, and they pay for it with a surtax on people who earn over $1 million a year. And now to live coverage of the U.S. Senate here on C-SPAN 2.
The Senate will come to order. Chaplain Dr. Barry Black will lead the Senate in prayer.
Let us pray. King and Judge of the universe, you rule with righteousness and govern with justice. You have been good to us, restoring our strength and directing our footsteps. Today, guide our senators in their labors. In these difficult days, empower them to produce dividends of character and grace. We pray not for tasks fitted to their strength, but for strength which fits them for their task. In the hard decisions of this day, guide them by your word and spirit. We pray in your loving name. Amen.
Amen. Please join me in reciting the Pledge of Allegiance to the flag. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Read a communication to the Senate.
Washington, D.C., December 8, 2011. To the Senate, under the provisions of Rule 1, Paragraph 3 of the Standing Rules of the Senate, I hereby appoint the Honorable John Tester, a senator from the state of Montana, to perform the duties of the chair. Signed, Daniel K. Inouye, President pro tempore.
Under the previous order, leadership time is reserved. Majority Leader.
That was a quick prayer. I missed that. Mr. President, following leader remarks, the Senate will be on executive session to consider the nomination of Richard Cordray to be Director of the Consumer Financial Protection Bureau. At 10:30, there will be a cloture vote on the Cordray nomination. If cloture is not invoked, the Senate will resume consideration of the motion to proceed to the middle class tax cut. As a reminder to all senators, cloture has been filed on the motion to proceed to S. 1944. Unless an agreement is reached, that vote will be tomorrow morning. Mr. President, shortly the Senate will vote on the confirmation of Richard Cordray to lead the Consumer Financial Protection Bureau. Again, Consumer Financial Protection Bureau. I stress consumer. By now, we all know my Republican colleagues will filibuster Mr. Cordray's nomination. They've said they will. This is not an up or down vote, but Republicans' effort to not allow a vote. They're stopping a vote on this very, very qualified man. They're not blocking this nomination because of any fault, real or perceived, in this candidate. He has bipartisan support and is eminently qualified. He has a long history of protecting consumers against unfair practices by financial predators. He currently serves as Chief of Enforcement at the Bureau. Before that, Mr. Cordray served as Ohio's Attorney General, a very important job in a very, very heavily populated state. While there, he recovered billions of dollars from pension funds on behalf of retirees, investors, and others. And he took action against fraudulent foreclosures and predatory lending. He's qualified. He's a man of diligence. Senate Republicans know that he's qualified. They're blocking his nomination, not allowing a vote, because they don't like the federal agency he would lead, an agency that has been established by law. This is the first time in Senate history a party has blocked a qualified candidate solely because they disagree with the existence of the agency that's been created by law. Republicans are doing this to undermine the system of law we have in our country. Democrats fought to pass Wall Street reform last year to protect against the greed of big banks. But without a director, the Consumer Financial Protection Bureau doesn't have the tools it needs to get the job done. And it's shocking that despite the economic crash in our rearview mirror, it's easy to look back and see what happened because of Wall Street greed. Republicans, in spite of that, would leave consumers without a watchdog to guard against the greed of Wall Street. That's unfortunate. Would the chair announce the business of the day?
Under the previous order, the Senate will proceed to executive session to consider the following nomination, which the clerk will report.
Nomination, Bureau of Consumer Financial Protection. Richard Cordray of Ohio to be Director, Bureau of Consumer Financial Protection.
Under the previous order, the time until 10:30 a.m. will be equally divided and controlled between the two leaders or their designees.
I ask that a quorum be called and the time be equally divided between the two sides.
Without objection, the clerk will call the roll.
Mr. Akaka.
Mr. President,
Republican leader.
are we on a quorum call?
Yes, we are.
I ask consent that further proceedings on the quorum call be dispensed with.
Without objection.
This morning, the Senate will vote on whether the new Consumer Financial Protection Bureau should be able to put a director in place before concerns about its accountability to the American people are addressed. Let me just stress at the outset that that's all today's vote is about. All today's vote is about is accountability and transparency. It's a debate about whether we think Americans need more oversight over Washington or less. Republicans made our position clear more than 7 months ago when 44 of us signed a letter saying we won't support a nominee for this bureau, no matter who the president is, until 3 common-sense conditions are met that would bring some transparency and accountability to the CFPB. That letter now has 45 signatories. The president knew about these concerns months ago, and he chose to dismiss them. And now he's suddenly making a push to confirm his nominee because it fits into some picture he wants to paint about who the good guys are and who the bad guys are here in Washington. So once again, Democrats are using the Senate floor this week to stage a little political theater. They're setting up a vote they know will fail so they can act shocked about it later. This is what passes for leadership at the White House right now. The president has made his choice about how to deal with this issue, and we've made ours. And what we've said is that until this or any other president addresses these legitimate concerns, we cannot and will not support a nominee. Here's what we said in that letter 7 months ago. First, replace the single director with a board of directors that would oversee the Bureau. Second, subject the Bureau to the congressional appropriations process. Third, allow other financial regulators to provide a check on CFPB rules so they don't imperil the health of financial institutions and lead to unnecessary bank failures. Look, everybody supports strong and effective oversight, but that has to include the overseers as well. Unelected bureaucrats must be held accountable to the American people, and that's exactly what our proposal would do. So really, it's up to the president. Republicans have outlined our concerns. They're well known. We're not going to let the president put another unelected czar in place, unaccountable to the American people. And frankly, his refusal to work with us on this only deepens our concerns. The CFPB requires reforms before any nominee can be confirmed. It's time the president takes these concerns seriously. So I look forward to hearing from the president on this issue so we can put in place the kind of oversight and accountability the American people expect in an agency of this size and this scope. Until then, I'll vote against this nominee for the CFPB and any others this or any other president sends until he works to fix the problems, until he brings transparency to this bureaucracy and accountability to the American people. Mr. President, I suggest the absence of a quorum.
Clerk will call the roll.
Mr. Akaka.
Mr. President,
Senator
I ask
Alabama.
that the quorum call be dispensed with. Unanimous consent.
Without objection.
Mr. President, I rise today in opposition to the motion to invoke cloture on the nomination of Richard Cordray to be the director of the Bureau of Consumer Financial Protection. Earlier this year, I and 44 of my colleagues sent a letter to the President expressing our concerns with the unaccountable structure of the Bureau. It is now, Mr. President, 7 months later, and the President has yet to respond. The majority has called for a vote that they know will fail today. It is evident that the White House and the majority have decided to place politics ahead of good policy. They have chosen to fabricate a political issue rather than do what is in the best interest of consumers. Nonetheless, they claim that this debate is about consumer protection. Mr. President, there's no disagreement, however, that consumer protection, as the Senator knows, needs to be enhanced. The only real point of contention is whether the new Bureau of Consumer Financial Protection will be accountable to the American people. If you believe regulators never fail, then the current structure of the Bureau is just fine. Yet we all know that regulators do fail and that their failures harm consumers. Members of the majority, I believe, have repeatedly made this point, with their criticism of the Fed's failure to regulate subprime mortgages and the OCC's preemption of state consumer protection laws. Mr. President, I strongly agree with the majority that our regulators failed to do their jobs in the lead-up to the financial crisis. But the lesson we should learn from the financial crisis is not that we need more unaccountable regulators. Instead, Mr. President, all of our financial regulators need to be held more accountable. Just as banks should be held accountable for their failures, regulators should also be held accountable for theirs. After all, if regulators know that Congress can hold them accountable, they will have a far stronger incentive to do their jobs, and that will be good, as we all know, for consumers. That is why, if the Bureau is reformed, the biggest winners will be the American consumers. Today, Mr. President, however, the majority will show that they're now more concerned with insulating bureaucrats from accountability and rewarding political allies than looking out for consumers. The administration and the majority will try to argue here that the Bureau already is accountable. Indeed, they will say that it's more accountable than any other financial regulator. But let's look at the facts. The facts tell a different story. First, it is necessary to appreciate the amount of power placed in the hands of the director of this Bureau. No bureaucrat will have more power over the daily economic lives of Americans than this director. The director, in effect, will decide which Americans can access credit to buy homes, purchase cars, and pay for college. The director will regulate not only financial companies, but also tens of thousands of Main Street businesses. And also, the director will unilaterally decide how the Bureau spends its up to $600 million budget. Mr. President, despite the vast power vested in the hands of the director, there are no effective checks on the director's authority. And to truly understand just how unusual the structure of the Bureau is, one need only compare it to other independent agencies. Unlike the chairman of the SEC, the CFTC, and the Federal Reserve, the director of the Bureau does not have to obtain the agreement of other board members or other government officials before acting. Unlike other consumer protection agencies, the Bureau is not subject to the congressional appropriations process. Indeed, Other consumer protection agencies, such as the Federal Trade Commission, Securities and Exchange Commission, are both subject to appropriations and are governed by 5-member boards. To further ensure against one-party domination, the FTC and the SEC can have no more than 3 members from the same political party. Mr. President, another important comparison is with the Consumer Product Safety Commission. This agency actually served as a template for Professor Warren when she first advocated for the creation of a consumer protection agency in an article several years ago. And how is the Consumer Product Safety Commission structured? It is first funded through appropriations, and there is a 5-member commission. Opponents of accountability have sought to justify, Mr. President, this Bureau, the structure of the Bureau, by pointing to the Office of the Comptroller of the Currency and the Federal Housing Finance Agency. Once again, the facts refute their argument. First, the Comptroller can be removed at any time by the President for any reason. In contrast, the President can remove the Director of the Bureau only for limited grounds of, quote, inefficiency, neglect of duty, or malfeasance. This means that the Director of the Bureau cannot be removed even if the Director pursues policies that are harmful to the American people. How is that good for consumers? As for the Federal Housing Finance Agency, its Director is far, far less powerful than the Director of the Bureau. The Director of the Federal Housing Finance Agency oversees the regulation of only 14 financial institutions. He does not have sweeping powers over all consumers and tens of thousands of Main Street businesses like the Director of the Bureau would have here. It should be common sense, Mr. President, that the more power an agency has, the more accountable it needs to be. Moreover, rather than attempting to point to other regulators to justify the structure of the Bureau, a more responsible approach would be to make all of our financial regulators more accountable. And we should begin right here with the Bureau. To make the Bureau more accountable, we have proposed 3 common-sense reforms. First, the Bureau should be led by a board of directors, as I've said. This is such a common-sense measure that the President and the Democratic-controlled House originally called for the Consumer Agency to be structured as a commission. Second, the Bureau's funding should be subject to congressional appropriations. Currently, the Federal Reserve is required to transfer up to $600 million to the Bureau each year. These are funds that could otherwise be remitted to the Treasury and used for deficit reduction or other things. Diverting this money to fund an unaccountable federal agency sets a dangerous precedent of using the Federal Reserve as an off-budget mechanism for funding programs. It hadn't happened before. In addition, funding the Bureau through the Fed removes any check on runaway spending. The physically responsible way, I believe, to fund the Bureau is through the congressional appropriations process, just like every other consumer protection agency is funded. Our third reform proposal is to create an effective safety and soundness check for the prudential bank regulators here. Some have said that the Bureau already has a check under the so-called Financial Stability Oversight Council veto. But this veto was designed so that it would never actually constrain the Bureau. The Council can only overturn a rule in an extremely rare case. The rule must put at risk the safety and soundness of the entire U.S. banking system or the stability of the U.S. financial system. And under this construct, a rule could cause the failure of multiple banks, but the Council still would not have standing to alter the rule. Additionally, the procedure here is rigged to prevent the Council from acting. It takes an affirmative vote, Mr. President, of at least 2/3 of the Council members to set aside one of the Bureau's rules, and the Bureau's director is a voting member of the Council. In addition, only 3 of the Council's 10 members are actually bank prudential regulators. This veto that we propose is not a check on the powers of the Bureau. It's a sham that they have today. We need to change that. Recent history shows that taxpayers are ultimately on the hook for bank failures. For this reason, consumer protection needs to be carefully coordinated with bank regulation to prevent against unnecessary bank failures. And as presently structured, the Bureau can ignore any advice offered by banking regulators, even if it undermines the safety and soundness of banks. Unless this structural flaw is remedied, a real possibility exists, Mr. President, that the Consumer Bureau will one day cause bank failures that end up harming consumers, taxpayers, and our economy. In light of the reasons of our reform proposals that we've requested, the question remains, why are the administration and the majority so insistent that the Bureau be unaccountable? Clearly, they want to use the Bureau as a political issue. A second reason is that they believe non-bank financial institutions are not currently regulated. But this is false. The Federal Trade Commission, the state's attorneys general, and state financial regulators all have authority over non-banks. A more likely reason for today's vote is that the Bureau will provide funding to key liberal activists like ACORN. Other agencies must return to the Treasury funds they receive from enforcement actions. This Consumer Bureau is now structured, is allowed to dole out money it collects from fines and penalties to liberal consumer groups. This reveals why the administration and the majority want so desperately for the Bureau to be unaccountable. They want the Bureau to be a permanent funding machine for their political allies. Finally, Mr. President, we're going to hear that our methods to achieve reform are unprecedented here in the history of the Senate. It's been said, never before has the consideration of a nominee been conditioned on a change in the law. This, of course, is ridiculous on its face. It's nonsense. Nominees are held routinely in the Senate by both parties for any number of reasons, including the desire to make changes in existing law. The only thing different in this particular case is that it's completely here transparent. No secret backroom deals. We're right here in the open. Mr. President, after all the harm caused to consumers by financial regulators, it's time that the majority stop using consumer protection as a political football and start taking actions that actually help consumers. We can take the first step by reforming the Bureau to make it accountable to the very consumers that it purports to protect. Until that time, however, Mr. President, we cannot, we should not, and we will not move forward on the nomination of the director to lead this massive and unaccountable bureaucracy. I urge my Democratic colleagues to stop obstructing reform and join with us to move forward on real consumer protection. I yield the floor.
Mr. President.
Senator from Rhode Island.
Mr. President, I would request the unanimous consent to be recognized for 5 minutes at the conclusion of Senator Johnson's remarks.
Is there objection? Without objection, so.
Thank you.
Mr. President.
Senator from South Dakota.
Mr. President, 2 months ago, the Senate Banking Committee voted along party lines to send to the full Senate the nomination of Richard Cordray to be the first director of the Consumer Financial Protection Bureau. Due to an unprecedented and irresponsible display of political gamesmanship, Mr. Cordray's nomination and strong protections for the American consumers are being held hostage. Before any candidate was put forth, Senate Republicans pledged to block the nomination, and their objections have nothing to do with Mr. Cordray's qualifications, his politics, or his character. Republican senators have actually admitted as much, with a public pledge to block any nominee for the new consumer agency until a list of legislative demands which would greatly weaken the agency, are met. That those demands were debated and rejected by a bipartisan Congress last year is beside the point. The minority party is distorting the Senate confirmation process mandated by the Constitution to rewrite a law against the wishes of the American people. Why do Senate Republicans remain opposed to consumer protection despite national surveys showing that 3 in 4 bipartisan supporters support the new agency's creation? Whatever the motivation, it appears to outweigh any concerns about protecting families, buying homes, students borrowing for college, and service members or older Americans falling prey to financial scams. This vocal minority, opposed to a strong consumer protection and helped by special interests, have jumped up misleading claims to hide behind. They claim the CFPB director will put the economy at risk, ignoring the effects of the foreclosure crisis, which was fueled by irresponsible and predatory lending. They claim that the agency lacks accountability, ignoring the fact that it is bound by accountability measures comparable to or exceeding that of other independent financial regulators. And they claim restrictions on abusive financial products will hurt lenders, ignoring the damage those products inflicted on consumers tricked into sending unfair contracts filled with hidden fees and penalties. In reality, the CFPB was created as an accountable yet independent regulator in bipartisan negotiations last year. Its mission is to protect consumers by cracking down on predatory lenders and streamlining disclosures so that families can make better informed financial choices. But until it has a confirmed director in place, the CFPB's authority over non-bank financial institutions like private student lenders and mortgage brokers will be stifled. Every day, Mr. Cordry's confirmation is blocked, vital protections are delayed, and millions of Americans, including service members, vets, and older Americans, are left vulnerable. And the nation's community banks and credit unions remain at a disadvantage to their less regulated competitors. The question we consider today should not be whether the minority party can hijack this constitutional process and demand as ransom legislative changes that would hamstring the consumer agency. The question should be whether Mr. Cordray is qualified for the job. And I believe that Mr. Cordray is an outstanding candidate. For years, Richard Cordray has worked tirelessly as a public servant. As Ohio's Attorney General, he aggressively pursued financial crimes by banks and mortgage firms and won more than $2 billion in settlements for the state. And as Ohio's first solicitor, he argued cases before the Supreme Court to protect consumers and enhance the quality of our financial markets. American families paid a steep price for the financial crisis battered by layoffs and foreclosures. Yet, incredibly, many of the bad actors that contributed to the crisis remain poorly regulated and continue to lobby against tougher regulation. Congress created the CFPB to protect consumers and create and clean up the marketplace, but it needs a director. Richard Cordray has proven himself capable for the job, and there is no legitimate reason to block his confirmation. I urge my colleagues to reconsider their political game plan to do the right thing. Stop blocking Richard Cordray's nomination and allow him to have an up or down vote. I yield to my colleague from Rhode Island.
Senator from Rhode Island.
Thank you very much, and I want to thank the chairman for his leadership on this important issue and so many other issues in the Banking Committee. And since September 2008, we have learned many lessons, hard lessons, about the facts that contributed to the financial crisis. And to address these systemic risks, to fix the system, we passed the Dodd-Frank Wall Street Reform and Consumer Protection Act. And one of the most important reforms we made in that legislation was the creation of the Consumer Financial Protection Bureau, or the CFPB. The CFPB is charged with stopping abusive mortgage originators, stopping abusive credit card companies, stopping abusive private student loan lenders, in a sense, protecting the consumer. We have for years had organizations that purpose was to protect the banking system and indirectly consumers. We need to provide a balance. And frankly, if we had this balance in place prior to 2008, we might have avoided some of the incredible costs we've seen, not only to consumers, but to the banking system as a result of predatory behavior by many different financial institutions. Unfortunately, many of my Republican colleagues are trying not to correct deficiencies in the Dodd-Frank Act or improve it. They want to gut it. And one of the things they want to take out is consumer protection. And they want to do that by denying a nominee to head this important agency. It certainly is a prerogative of my colleagues to work on improvements to any piece of legislation, but effectively to say we will not let legislation that has passed this body by 60 votes, that has ample precedent in the law to take effect because we won't put a person in charge, is, I think, abusing the process. We have worked on this issue, and we know that consumers need these types of protections. We know that daily there are scams targeting the elderly, there are unscrupulous mortgage lenders, there are abusive payday lenders. Not all. In fact, these individuals probably represent a very small minority of the financial community, but they are abusive predators, particularly to the most vulnerable people in our society. There's been a lot of discussion about the 1% and the 99%. Well, guess what? The 99% are consumers. And the 1%, they're probably those people that are running some of these major institutions, some of them with great fidelity and scrupulously, but there are others who aren't. We want to protect consumers in this country, all of us, and certainly the 99%. But because of Republican opposition to this nominee, we're running into a real problem. If we do not have a head of this organization, then it cannot effectively implement the regulations, effectively enforce the laws it's been given the task to do. We have to have rules that apply across the country, that gets at the shadow banking system, that provides the kind of protections that consumers can rely upon, and in fact improves the operation of the marketplace. Again, I think there's some of the people who regret what happened the most of the 2007, 2008, 2009 time period are financial leaders looking around and saying, why wasn't anyone checking the behavior of some of these financial companies out there that have ruined my marketplace and ruined my reputation? Well, we have to do that. And the longer this person is blocked, Richard Cordray, who is entirely qualified, former treasurer of the state of Ohio, knows the financial business, worked closely with banks as the treasurer, former attorney general of Ohio, worked to protect consumers, someone who has the intellect and the character to do an outstanding job. We have to get him in place. And who's suffering if we don't do this? Well, among those who are suffering are military personnel. I had the privilege of commanding a paratroop company in the 82nd Airborne Division in the 1970s. I was an executive officer, and I handled all the complaints, all the dunning, all the letters that were coming in from my soldiers. And it's gotten worse. Holly Petraeus, who's the head of the Office of Service Member Affairs in the CFPB, testified before the committee. She talked about Internet lenders who cater, who target military personnel, vulnerable soldiers and their families who are about to deploy, who just came back from Afghanistan. They'll give you a loan of 40% of your pay. Of course, the interest rate can be as high as 584% APR. And we can't stop that until we get somebody like Richard Cordray in charge of this organization. She also talked about the Dunning calls, 20 times a day, threatening them. We'll go to your commander. We'll have you court-martialed. We'll take away your security clearance. We'll ruin your career. We've got to stop that. This is about real people, real consumers. We've got to confirm Richard Cordray. And with that, I yield the floor.
Mr. President.
Senator from New Jersey.
Mr. President, I understand I have 5 minutes.
There's no order. The senator may use 5 minutes.
Okay.
There's no order. The senator may use 5 minutes.
Thank you very much. Let me first thank Chairman Johnson for his leadership in this regard and so many other major issues before the Banking Committee, and he's really exercised a lot of our oversight obligations in making sure that we implement Wall Street reform in a way that protects all of us as taxpayers in the country but creates a system that still can let us economically flourish. And this is one of those. Mr. President, for too long, too many in Washington protected Wall Street from common sense regulations and let consumers fend for themselves. And for too long, Republican economic policy, when it should have protected the 99% of American consumers from the reckless financial gains that led us to the brink of economic disaster in 2008, protected the 1% on Wall Street instead. Now, banks played Russian roulette with the future and economic security of middle-class families, and no one was watching. Backed up by too-big-to-fail government guarantees, they wreaked havoc on our economy and on the jobs and retirement savings of families who played by the rules. We have lived through the unfortunate results of lax oversight, and now it's time to work together to correct it. It's time to stop the political gains and govern. It's time to act. It's time to work together to make sure middle-class families get the protection they deserve and the watchdog they need. This is really about whose side are you on. Cordray and consumer protection are being blocked simply because Republicans want to protect Wall Street. Wall Street already has a legion of lobbyists protecting its interests. We need someone who can protect Main Street's interests, and that's what Richard Cordray would do as the director of the Consumer Financial Protection Bureau. Richard Cordray is an unquestionably well-qualified nominee, and no one is disputing that fact. No one. I've not heard anyone dispute his qualifications for the job. We know the Consumer Financial Protection Bureau will be off to a good start with Richard Cordray at the helm, despite efforts by special interests to derail the process. It will be a strong but fair agency under Richard Cordray to protect financial consumers who are tired of being tricked by the fine print, the gotcha paragraphs that no one but a bank lawyer would understand. And despite historical claims from Wall Street, the Bureau actually won widespread praise from both consumers and the industry for its first major initiative when it created new and greatly simplified Know Before You Owe mortgage loan disclosure form so that consumers understand what kind of mortgage they're getting into before they take it. Had we had that type of language early on, maybe we wouldn't have had part of the crisis in which consumers were led to bad mortgage products that ultimately had skyrocketing interest rates when they qualified for a conventional mortgage. Maybe we wouldn't be in the great predicament we have been since 2008. Under Wall Street reform, Richard Cordray will be there to prevent those families from being ripped off again. And fixing our broken system was not easy, and it's still not over. We're still fighting to keep the ground we've gained against special interests. Mr. President, the longer this nomination is delayed, the more that consumers will suffer. Without a director, the Consumer Financial Protection Bureau cannot carry out some of its most vital functions, including regulating payday lenders, pawn shops, private student loan companies, those who make unscrupulous and predatory loans on our military families. You heard Senator Reid has great experience of this, talk about that. giving them an unfair advantage at the same time as they do that over community banks and credit unions that are regulated, that are good, and that play by the rules. So now is the time to work together to make that happen. So, Mr. President, I ask that my colleagues stop playing games. Let us go to a final up or down vote on Mr. Cordray, and I ask that my full statement be included in the record.
Without objection. President. Senator from Louisiana.
Thank you, Mr. President. Mr. President, there's been a lot of wild rhetoric, quite frankly, hyperbole, exaggeration. I wanted to try to bring this discussion and this debate back to reality. And to do that, I wanted to remind folks that conservatives objecting to this nomination have from the very beginning laid out three very narrow, specific, concrete reforms that we are seeking. So this notion that we're against consumer protection, we're trying to gut CFPB, is just silly. Let's get back to reality. Let's get back to what we have said from the very beginning. We want these three important reforms. First of all, we think it's very important for the single director, a new czar, quite frankly, a credit czar, to be replaced with a board to oversee this bureau. That's how other comparable agencies operate. The best example, the best comparison is the SEC. I think that's a critical check on the Bureau's authority to have a board that can discuss and come up with a consensus, not a single agency. Secondly, related to that, there should be safety and soundness checks for the prudential financial regulators who oversee the safety and soundness of financial institutions. Mr. President, one of the core reasons that we had the 2008 financial crisis is we had political agendas run amok with regard to financial institutions with no safety and soundness check. We're putting that same problem on steroids in this new all-powerful bureaucracy. And so again, point number two, very specific, very concrete, very common-sense reform that we've proposed from the beginning is this safety and soundness check. And third, and perhaps most importantly, the Bureau should be subject to the congressional appropriation process so there's some oversight and accountability from the American people and their representatives. That's the norm. That sort of check and balance, that oversight and accountability is absolutely the norm. This is way outside the norm to have no oversight and accountability because as it stands now, this new super bureaucracy has an unlimited check that it gets from the Federal Reserve. Never has to get an appropriation, never has to answer a single question from the people or their representatives. Again, the CFPB as it stands now draws its budget directly from the revenue of the Federal Reserve. By the way, this revenue would otherwise be deposited into the Treasury, paying down the debt. The CFPB is not just about mega institutions, mega banks, more hyperbole that's been thrown on the floor. It's about anyone, any business, for instance, that offers 4 or more payment installments in an installment plan. Sure, that includes Citibank, also includes your dentist, your vet, your local electronics store. CFPB right now is so unlimited in their authority that they're able to limit or prohibit the terms of any such product or service, has power over marketing of any such product or service in its jurisdiction with, again, the Federal Reserve as its basically unlimited piggy bank. So I think these concerns we have are pretty darn fundamental and have a lot of common sense in them. And again, we have three very specific concrete reforms that we want advanced. Not trying to gut the CFPB. Those reforms would not gut it. Not against consumer protection. Those reforms would still have a sound, strong consumer protection agency in place. You know, I think the American people deserve a more honest debate than, quite frankly, they're getting in a lot of this. This notion that if you're against Obamacare, you're against all improvement of the health care system is silly. And I think Americans get that as their health insurance premiums go up significantly now by every accounting, by every independent source, well beyond what they would have gone up otherwise. Being against that isn't being against health care reform. You know, we heard it even earlier. If you're against the stimulus plan, you're against economic recovery. Well, that's just silly. And I think Americans know that now that we're still stuck at very high unemployment. How's that recovery working out for you? I was against the stimulus because I was for economic recovery. And it's the same thing here. We need to advance the interests of the American people, certainly including consumers, but we don't need an all-powerful new czar in Washington to do it, which can hurt everyone, including consumers. And so we continue to advance three very specific, concrete, common-sense reforms. And that's all we want. That doesn't gut CFPB. That isn't against consumer protection. It is against unbridled, really unprecedented authority. And the American people, agency after agency, issue after issue, have seen the effects of that sort of unbridled, virtually unlimited federal government authority in the last 2 years, and they don't like it. Thank you, Mr. President. I yield the floor.
Senator from Ohio is recognized.
Thank you, Mr. President. It ceases to amaze, it never ceases to amaze, Mr. President, to hear my colleagues whose first loyalty is to Wall Street banks, who continue to make excuses for being against putting a consumer cop on the beat. They talk about budget. Now, this is an office that will be a few $100 million office, this consumer protection, this consumer cop on the beat. But this consumer cop on the beat has to look at trillions of dollars in mortgages, has to protect consumers when there are $30 billion in overdraft fees alone that banks are charging, when many times those overdraft fees are because consumers simply can't figure out the fine print and don't understand the terms of the agreement. In the end, again, people on this floor, their special interest friends in the Congress, their Wall Street bank, the friends of Wall Street banks, the friends of these interest groups that continue to fleece the American people. If we had had Rich Cordray, or Elizabeth Warren for that matter, the consumer cop on the beat, would we have had these kind of foreclosures in places like Cleveland and Dayton? Would we have had these fly-by-night mortgage brokers from Ameriquest in New Century and others moving in and taking advantage of people? I'm not sure we would have. But my Republican colleagues, my colleagues who always do the bidding, not all of them, but many of them always do the bidding of these special interest groups that have inflicted far too much damage on this economy. Now, I hear all of this, that if we just would make some changes in this agency. Why? Mr. President, I talked to the Senate historian, because I've heard these arguments, if we just change this agency, I'd vote for it. Well, first of all, I talked to the Senate historian who said never in the history of the United States Senate has one political party tried to block the nomination of a presidential appointee based on wanting to change the agency. It's nothing about the qualifications of Rich Cordray. I know Richard Cordray better than anybody in this institution. He's from my state. He was our Attorney General. He was the state treasurer. He was county treasurer. He was a state legislator. I've known Rich for over 20 years. I know that he's qualified. My colleagues here on both sides say he's qualified, but they say, well, we want to change the agency. Well, the agency, we worked with Republicans to change this agency as it went through the process, Dodd-Frank. They keep shifting the goalposts. In order to accommodate Republican concerns, we made the CFPB a bureau at the Federal Reserve. Many of us thought he should be totally independent. We were willing to make that concession in order to get Republican support. They then, after we did that, they asked for regular GAO audits of the books. They got them. and the GAO said that the CFPB passed with flying colors. Then they said, we don't like Elizabeth Warren, give us somebody else. Elizabeth Warren withdrew. She was a great consumer activist, would have been very good at this. We're replacing her, the president is, with Richard Cordray from Ohio. He will do this job well. Then after he's appointed, they say, well, and Richard Cordray's got support from banks and credit unions and consumer groups. That's still not good enough. Then they said, they asked the president not to recess appoint a director. The president agreed to that. It's still not. They're moving the goalposts. Now they're saying they won't approve anyone to serve as a director of the Consumer Bureau unless we change the Bureau. In other words, to protect their Wall Street friends, they're saying, we're not going to allow a director to be in place unless you weaken this agency. As Senator Reid from Rhode Island said, would we not appoint a director of the Food and Drug Administration in the future until we roll back all food safety laws? Are we not going to protect the Consumer Products Bureau in the government and the Department of Commerce until we roll back child toy safety laws? I mean, that makes no sense. This was voted with more than 60 votes, 61 or 62 if I recall, a supermajority in this Congress. 2 years ago, we allowed all kinds of amendments. We accepted many changes that Republicans want, but in the end, let's see, it's a choice. Are we for consumers or are we for Wall Street? Well, you know who it is. And all we're asking, Mr. President, I'm not asking my colleagues to vote for him. I'm asking for my colleagues to let us have an up or down vote. Just let us vote on it. Don't filibuster. Don't block the vote. Understand that this is a vote coming up that's to break a filibuster, to break a Republican filibuster where Republican senators almost always are flacking for Wall Street. And they do that. It just never ceases to amaze me, Mr. President. So all we ask is an up or down vote. Vote yes on cloture so we can have an up or down vote for Attorney General Cordray. Mr. President, I yield the floor and ask for a yes vote.
Senator's time has expired. All time having been yielded back. So the clerk will report the motion to invoke cloture.
We, the undersigned senators, in accordance with provisions of Rule 22 of the Standing Rules of the Senate, hereby move to bring to a close the debate on the nomination of Richard Cordray of Ohio to be Director, Bureau of Consumer Financial Protection, signed by 18 senators.
By unanimous consent, the mandatory quorum call has been waived. The question is it the sense of the Senate that debate on the motion to proceed to S. 1944, a bill to create jobs by providing payroll tax relief for middle-class families and businesses and for other purposes, shall be brought to a close? The yeas and nays are mandatory under the rule. The clerk will call the roll.
Mr. Akaka. Mr. Alexander. Ms. Ayotte. Mr. Barrasso. Mr. Baucus. Yes, sir.
No, closure. Well, you're not the only one who wasn't even thinking about that. We weren't here.
Mr. Baucus.
Closure on Cordray.
Mr. Beckidge, Mr. Bennett, Mr. Bingaman.
Yes.
Mr. Blumenthal. Mr. Blunt. Mr. Bozeman.
I know, I didn't read it.
Mrs. Boxer.
I didn't read it.
Mr. Brown of Massachusetts.
I didn't.
Mr. Brown of Ohio. Mr. Burr. Ms. Cantwell.
Okay.
Mr. Cardin. Mr. Carper.
Hold on.
Mr. Casey. Mr. Chambliss. Mr. Coates. Mr. Coburn. Mr. Cochran. Ms. Collins. Mr. Conrad. Mr. Coons. Mr. Corker. Mr. Cornyn. Mr. Crapo. Mr. Dement. Mr. Durbin. Mr. Enzi. Mrs. Feinstein. Mr. Franken. Mrs. Gillibrand. Mr. Graham. Mr. Grassley. Mrs. Hagan. Mr. Harkin. Mr. Hatch. Mr. Hatch, Mr. Heller, Mr. Hoven, Mrs. Hutchison, Mr. Inhofe, Mr. Inouye, Mr. Isaacson, Mr. Johans, Mr. Johnson of Wisconsin, Mr. Johnson of South Dakota, Mr. Kerry, Mr. Kirk, Ms. Klobuchar, Mr. Cole, Mr. Kyle, Ms. Landrieu, Mr. Lautenberg, Mr. Leahy, Mr. Lee, Mr. Levin, Mr. Lieberman, Mr. Lugar, Mr. Manchin, Mr. McCain, Mrs. McCaskill, Mr. McConnell, Mr. Menendez, Mr. Merkley, Ms. Mikulski, Mr. Moran, Ms. Murkowski, Mrs. Murray, Mr. Nelson of Nebraska, Mr. Nelson of Florida,
Nobody understands the reason. The public doesn't. So that
Mr. Paul, Mr. Portman, Mr. Pryor, Mr. Reed of Rhode Island, Mr. Reed of Nevada,
That's a bigger tragedy.
Mr. Risch,
It's uniquely the best for them.
Mr. Roberts, Mr. Rockefeller, Mr. Rubio, Mr. Sanders, Mr. Schumer, Mr. Sessions, Mrs. Shaheen, Mr. Shelby, Ms. Snow, Ms. Stabenow, Mr. Tester, Mr. Thune, Mr. Toomey, Mr. Udall of Colorado, Mr. Udall of New Mexico, Mr. Vitter, Mr. Warner, Mr. Webb, Mr. Whitehouse, Mr. Wicker, Mr. Wyden. Senators voting in the affirmative. Akaka, Bingaman, Brown of Massachusetts, Brown of Ohio, Cantwell, Franken, Inouye, Johnson of South Dakota, Klobuchar, Cole, Menendez, Nelson, Nebraska, Reed of Nevada, Schumer, Tester, and Udall of New Mexico. Mr. Leahy? Mr. Leahy, aye. Senators voting in the negative. Alexander, Burr, Corker, Dement, Johnson, Wisconsin, Kyle, McConnell, and Shelby. Mrs. Murray, aye. Mr. Cochran, no. Mr. Moran, no. Mr. Blunt, no. Mr. Carper, aye. Mr. Lugar. Mr. Lugar, no. Mr. Webb, aye. Mr. Rockefeller, aye. Zayat, no. Mr. Thune, no. Mr. Enzi, no. Mr. Wyden? Aye. Johnson, Wisconsin? No. Mr. Risch? No. Mr. Bozeman? No. Mr. Crapo? No. Mr. Wicker? No. Mr. Conrad? Aye. Mrs. Hagan? Mrs. Hagan? Aye. Mrs. McCaskill? Aye. Ms. Landrieu? Aye. Mr. Coburn? No. Mr. Cornyn? No. Mr. Vitter? No. Mr. Johans? No. Mr. Isaacson? No. Mr. Bennett? Aye. Mr. Lautenberg? Aye. Mr. Casey? Aye. Mr. Portman? No. Mr. Roberts? Mr. Roberts? No. Chambliss? Mr. Chambliss? No. Mr. Sanders? Aye. Mr. Risch? No. Mr. Reed of Rhode Island? Aye. Mrs. Shaheen? Aye. Mr. Coons? Aye. Mr. Manchin? Aye. Mr. McCain? Mr. McCain? No. Mr. Barrasso? No. Mr. Inhofe? No. Mr. Cardin? Aye. Mr. Lee? Mr. Lee? No. Mr. Coates? No.
If you want them to hook up now so we can nail them, or what? We should hook up soon so we can nail them.
Mr. Warner? Aye. Mr. Nelson of Florida? Aye. Mr. Blumenthal? Aye. Ms. Stabenow? Ms. Stabenow? Aye. Mr. Levin, aye. Mr. Toomey, no. Mr. Rubio, no. Mr. Paul? Mr. Paul, no. Ms. Collins? Ms. Collins, no. Mr. Graham? Mr. Graham, no. Mr. Grassley, no. Mr. Harkin, aye. Ms. Mikulski, aye. Ms. Murkowski? Ms. Murkowski, no. Mr. Udall of Colorado, aye. Mr. Hatch? Mr. Hatch, no. Mr. Heller, no. Mr. Lieberman? Mr. Lieberman, aye. Mrs. Hutcherson, aye. Mrs. Hutcherson, no. Mr. Hoven, no. Mr. Sessions, no. Mrs. Hillenbrand, aye. Mrs. Feinstein, aye. Mr. Baucus, aye. Mr. Pryor? Aye. Mr. Beckidge? Aye. Mrs. Boxer? Aye. Mr. Merkley? Aye. Mr. Whitehouse? Aye. Mr. Durbin? Aye. Mr. Kirk? Mr. Kirk? No.
You had a cloture vote.